Welcome. Just we are following this book. Today we discuss cost flow assumptions. Okay, basically please look here. Cost flow assumptions do not need to be consistent with the physical movement of the goods. That means physical movement of the goods. Consistent need do not need to be consistent with the physical movement. So actually, this is the American company. They follow this FIFO method 45% and average cost 60% and LIFO 24%. I think clear to everyone. Now next slide. Cost flow assumptions illustration data of custom electronics ostro condensers. Okay, so custom electronics ostro condensers date January 1 beginning inventory 100 units and unit cost 10 and total cost 1000. This is the April 15 purchase. We have purchased 200 units and unit cost 11 and total 2200. And this is the August 24 purchase 3300 units and unit cost 12 and total cost 3600. Okay, and here purchase November 27 purchase 400 and this is the unit cost 13, so total 5200. So here total cost 12,000 and total units available for sale 1000, but this is the units in the ending inventory for 50. So units sold how much? 550 units already we have sold. Okay, so how many units we have sold? 550 units we have sold, and this is the ending. But if we follow the FIFO method, let's look here, FIFO, just to explain a little bit here. First in first out, FIFO method, first in first out, FIFO, first in first out. So in first in first out method, just very easy to understand. This is first in first out, this 1000, and just we need to be consider from last one. So 450, this one suppose first in first out, first in first out, first in first out, but this 400, this is unsold. That means this is the ending inventory 450. So here this is the 400, we consider from here 50. Okay, from here 50, that means from 300 units 50 consider. So this is 4 and this is 50, so it could be 450. And now just this 100 units sold, 200 sold, and here 250 sold, 250 sold. I think everybody is clear. And here this is the explanation. Just first in first out, FIFO, just consider here the cost of the earliest goods purchased are the first to be recognized in determining cost of goods sold. If we determining cost of goods sold, that times the earliest goods purchased are first to be recognized. That means this is the earlier goods, the beginning, this is earlier and purchase. That means this this is the follow, this is the cost follow, this taka 10 cost follow assumption. That means cost, this is the cost, taka 10 first on, taka 11 second on, 12 third on, etc. So we call here, this is the cost of the earliest goods purchased are first to be recognized in determining cost of goods sold. Number second, often parallels actual physical flow of merchandise. Actual physical flow of merchandise. Okay. Actual physical flow of merchandise. That means this is our merchandise goods, and we need to be parallel physical flow. Number three, companies determine mean the cost of ending inventory by taking the unit cost of the most recent purchase and working backward until all units of inventory have been costed. That means this is very easy to understand. This portion I will make you clear this portion. That means here we have units in ending inventory 450. Okay, so this 450, just here 400 and our unit cost 13, and here we consider 50 and our unit cost 12. until completed the 450, just we need to be costed. Okay, so in our answer we will look this matter. Now we will move next slide. First in first out, we will look here the beginning inventory, and this is January 1, April 15, August 24, November 27, and this is the beginning 100, 200, 300, 400. This is the unit cost, and total cost 12,000, and this is the total units 1,000. Okay, so step on, look here everybody please. So this is the units 400, that means ending inventory, 450. So how could we get this? This is the 400. Okay, and from here we will consider 50, and then we consider here 250. Oh, this is already sold. This is sold, this 200 sold and 100 sold. So this is the price, 12 taka and 13 taka. So 13 taka 5,200 taka, and 12 only 600. So if we consider here 3,600, and if we subtract this 600, that means 50 units, that's a 50 units 600. So if we subtract 50 units, the price will be 600. So 250 units price will be 3,000 taka. Okay, so this 31 will be cost of goods sold. This 31, that means 1,000, 2,000, 200 and 300. The total would be 321, that means 6,200. This could be our cost of goods sold. Okay, so please look here, cost of goods sold, cost of goods available for sale, this one 12,000, and ending inventory 5,800 according to question, and this is the cost of goods sold 6,200. Now next slide we show this matter again. This is the cost of goods sold 6,200. That means this 1,000, 2,200, 3,000. Okay, so after adding these three figures we are getting this figure, and this is our closing. That means warehouse will available, we will show this matter, this one. That means this is our warehouse and ending inventory, just these two figures added, and this figure will be 5,800. I think everybody is clear. Okay, so that's all for now.